Yes, absolutely, Alex. And GIC RE is the counter that we are going to talk about today on back of its numbers. And we are joined by Devesh Srivastava, who's the Chairman and Managing Director at GIC RE, who's joining us on the show. A very good morning to you, Mr. Srivastava. Thank you so much for joining us on ET Now. And firstly, let's talk about the gross premium in the quarter gone by. It had declined by about 23%, while your PAT stood at around 729 crore rupees. And this compared to a loss that you all had posted a year ago, a loss of around 139 crore rupees. Could you help us understand what are the factors that actually led to such a performance for GIC Re in the quarter gone by?
In the balance of reinsurance, you see this business is pretty much long term. So a quarter on quarter may not be a true reflection of the processes and whatever is happening, but certainly it is indicative enough. Now, in our case, we have been saying that we are working towards decreasing our incurred claim ratio, therefore decreasing our combined ratio as well, because that is the real measure of a reinsurer, that when your combined is below 100 is the time when you're making a profit, and anything beyond 100 is that you are now making profit not from operations, like in our case. So that is a journey that we had embarked upon, and we have progressed on that pretty well. Now, obviously, that journey meant that we would have to prune our portfolio. Now, we did grow enormously about 3-4 years ago, but any growth must necessarily be followed by a period of consolidation. Exactly what we have been doing, and we consolidated our books to make it much more efficient, to make it actually work for us. That is why you see the degrowth in premium, which is essentially because of the pruning of our portfolio. And because of the pruning of the portfolio, making it healthier, you have now on your books risks that are much better managed, and therefore they have a lower incurred claim. And that is why you see that loss that was there in the earlier Q1 is now turning into a profit. So that is how this whole thing is worked out.
Okay. Sir, could you also give us an overview of how the premium growth is fared in domestic versus international, and talk to us about market share in the international space? What is the strategy on that front going forward?
The domestic premium has grown appreciably, and that is largely because the retail sectors of health, especially, and motor, that has grown very much. Now, COVID has proved to be, I shouldn't be saying this, it's politically not correct, but as far as us in insurance sector is concerned, it has seen a boom in the health sector. Now, more and more people, especially in the retail segment, are looking at health insurance offer being a necessary spend for them. That is good news for us. And once you take health insurance, obviously you'll go ahead and take other insurances as well, because then you start realizing the worth of insurance. So that's why the market has grown appreciably. For us in GIC, these retail segments like motor and health do not take up or do not require too much of reinsurance. Reinsurance comes into the picture only when the going gets big ticket. And these sectors that have grown and are responsible for the growth of the Indian insurance sector are not really the ones that require too much of reinsurance. So therefore, the growth of the industry in Q1 is not really something that should, of course, it will rub down to us as well, though not as much as you would for a reinsurer, because the game is different here. Internationally also, because the rates have hardened, we do have a scenario where the premiums are being, capacity being at a crunch, premiums have improved. And therefore, there is a growth. Obviously, not as much as you see the Indian market growing.
Right. Let me actually shift away from the domestic market and talk about global market exposure. And talking about that, could you please help us understand if you have any exposure in Russia, Ukraine, or the parts of Europe that are actually suffering right now due to the ongoing geopolitical tensions? And if yes, if you could tell us any losses are expected over there for your company?
As a reinsurer, we are doing business with 160 countries of the world, because spread is a basic tenet of reinsurance. And therefore, we are having exposures in all those countries that you spoke of. The question is that, is our spread wide enough to take this in our stride? The answer is an emphatic yes. In Ukraine, our total premium that we get from the Ukrainian market was less than $1 million. which is nothing when you compare it to our total premium that we are doing in our books. In Moscow, we have our own subsidiary, which is a 100% owned subsidiary of GIC of India. That is there in Moscow, and we have been there for almost 2 decades. Currently, it's on a pause mode, but yes, that operation is something that we would look to have in future as well.
Now, you spoke about the changes that the insurance space has witnessed post-pandemic. Health insurance certainly has been in focus. And there have been other structural and permanent changes as well. Help us understand what you're focusing on. What key trends and outlook are you looking at for the sector?
If you see the basic feed of the insurance sector, and therefore, of course, for reinsurance as well, what is it? That is our raw material, so to say. Our raw material are risks. We cover risks. We are the risk takers of the world. Now, in every company, and the pandemic has accentuated it, in fact, all the companies are now looking at the risks that they are prone to, or the risks that could actually ruin their business. When you have a chief risk officer, something that you never had a couple of decades ago, these people are now trained to see risks. And how do you mitigate that risk? You mitigate that risk largely by buying insurance. So our feed is very good. The pandemic has really worked wonders for the sector, and that is why you're seeing the growth, especially in the retail sector, because retail is the future. Over and above that, with the emphasis the government of India is laying on your economic build-up and your infrastructure, that is very good news. That's music to our ears. So we see a huge amount of potential in this field going forward.
Thanks so much, Mr. Srivastava, for taking the time for joining us on ET Now. Wish you all the best.